Good morning, everyone. Happy Saturday. It's January 30th, 9 a.m. Today's video is only for Advantage members. Today, I'm going to start discussing exactly what's happening in the market, all the chop that we've experienced, and also some of the more, analogous cases of exactly what's happened in the stock market and how that's relating to crypto and how that actually pertains to things happened historically in the stock market in 2008, in the dot-com bubble in 2000. Okay, so let's get to it. First, let's talk about crypto. All right, as you very well know, yesterday we had a huge short squeeze to the upside, very, very hard rejection up here, and then started to break price down right near the lows of exactly where we pretty much opened up this pump. Okay. So where we are right now is we pretty much retraced like 80-90% of this entire movement up and on the way back down. Now, the way short squeezes are generally supposed to work is you're supposed to make the buyers stay in control and make the shorts feel the pain to the upside. And you have to make other people play catch up to price and keep driving up price. If this is a real short squeeze and you're supposed to keep driving up the market. And sometimes short squeezes do simply just their business and their job, which is to squeeze out shorts and then return back to the original trend of the market. And the trend of the market for pretty much most of January has been this, lower high, lower low downtrend. Okay. So prices effectively come back inside this range right here. This marker that you see, 35,000, that's really the mid range of this high and pretty much this low, right? And so price is once again inside the mid range. So what you would do here in situations like this is number one, probably a no trade zone. Okay. Number two, price needs to get back above at the very least 35,000 or at the very best 38,225 up here and start pushing, and then we can start talking about higher prices. It looks to me like it's abundantly clear that this movement right here was kind of like a scammy movement. I don't know if the whole Elon Bitcoin thing had anything to do with it. At the end of the day, all right, the one thing that I want to explain to you guys is no matter how much money you think that retail is involved with, they are generally not the drivers of the market. They may help add fuel to the fire, but the general direction of the market is almost always created by the institutions. And I'm going to illustrate this with two different points. One in our current time that we're dealing with, which is this GameStop situation, right, that everybody knows about. So if you're not aware of what exactly has been happening over the last several days, is GameStop, this brand in the US, which is pretty much like a brick and mortar company that sells video games, to you when you go into the store, right? I think we very well know that a company like this is going to find it very hard to survive, not only in the pandemic, but especially in the era of companies like Amazon and online distributors that are out competing GameStop. Okay, I mean, this company should very well be valued at maybe $5, maybe $3. That is literally the fair book value of it. Now, what happened is some people on Wall Street Bets, some people in the financial world found out that there are some huge short positions in GameStop from big hedge funds, okay, with billions of dollars. And these people decided to start putting the screws to these short positions, and they started driving up price. They started buying the stock. They started buying call options, which again, you're betting on the price to go up. And they started squeezing this price all the way up. Okay. Now, I'm okay with people being involved from Wall Street Bets. I'm part of Wall Street Bets on Reddit and Discord. I'm completely okay with that. The problem that I have with this is, you think that you've joined some sort of revolution, if you will, when you're putting the screws to the big guy, which is the hedge fund institution. When in fact, what's really happening is they're using you, the retail, the bait, as the media talking point as the money on the side, who will ultimately probably be holding the bags on the way down. Now, I'm going to give you a perfect example of this, one of many that has happened in the 2000 dot-com bubble. I had to look this up and I had to talk to Austin. If you guys remember Austin, we used to do stock market conversations with him, and he explained to me that there's a similar story, just like GameStop, just like many other companies, in the past and in today, that has a similar trajectory of what's happening, and it's called iOmega. Back in the dot-com bubble in 1999, 2000, if you guys are not aware of it, read up on it. There's hundreds and thousands of companies. Okay, the bubble was being created, which was a tech bubble, and in this bubble, hundreds and thousands of companies that were generally worthless were being taken to astronomical heights. Okay, what would happen is these hedge funds and these institutions, they would find out any name associated with the internet, and they would drive up the price to insane valuations. A company that would be worth, say, maybe $10,000, which has literally a website. And back then, that's all you needed. You just needed a company like, say, iOmega.com, and it became the next hype cycle. And they drove this stock up basically from pennies to, I think at some point, maybe like 25, 50, or maybe even $100. So it was worth, multiple hundreds of millions of dollars. Okay. But everybody knew that most of this is a bubble, that most of this is garbage. And there was additionally on top of this, there was these people called iOmegans. And this you'll have to look up a little bit because you have to talk to someone who lived through it, right? And I had to talk to Austin, who was part of a city management group back in the 90s. And he explained to me that the same hype that you're seeing about GameStop, and you think that these Reddit people, the Wall Street bets, are revolutionaries and that they're doing something great, is the same thing that happened with iOmega. Everybody became very, very aware of the story of GameStop, and everybody wanted to buy into the hype. I personally know on my Facebook feed and countless amount of people who have asked me about GameStop and AMC and BlackBerry, Nokia, which are worthless companies now, but their stock has gone bonkers, right? And of course, I get it. It's human nature to want to get into the hype cycle and make quick money and easy money. But remember, institutions will be able to get out of the market pretty much at the highs, and retail will generally be holding the bags on the way down. Now, if you're in the US, I'm sure you've been following the story. Even if you're abroad, some point this might have hit your news cycle, but this is what's happening in the market. Okay. Now, the reason I'm bringing this up is because more often than not, retail is generally involved in creating tops in the market. The overwhelming exuberance, the overwhelming hype, external factors, they draw too much attention to the market and they help create the top, really. Because it's very easy to understand when the market has a lot of euphoria, a lot of excess, a lot of froth, and institutions are the only ones who can stay unemotional in situations like this because they know the true value of stocks like this. They don't care about the hype. Okay, they're the ones who are creating the hype. So the sad thing about all this is you may think that you are some form of revolutionary, that you're joining in on GameStop, squeezing the big guy. But remember, the big guy is actually taking advantage of you. He's taking advantage of you and the hype and your money, and he's going to be letting you hold the bags all the way down. And I guarantee you, there will be a day that GameStop will literally drop 50% overnight. And then it'll drop 70 and 80 and 90. And probably at some point it will go bankrupt because that's its destiny in this era. Okay, GameStop is not a company that's going to survive more than likely, right? It's like the Blockbuster of, the 90s and the early 2000s. Okay, we knew what was coming, right? But point is, this hype cycle that's happening in the stock market and Wall Street bets has gotten people in crypto to think that this is what happens when more retail gets involved. We pump markets. That's not what happens. You're mistaken. You want institutions and hedge funds to join the fun. They are the ones who ultimately dictate the direction of the market, and they fuel the market to go higher. Okay. So don't be mistaken. Don't buy into this garbage about GameStop and Elon Musk talking about Bitcoin and putting that into his bio as the one thing that pumped Bitcoin all the way up. That was just an excuse. It didn't matter, right? If it was so great, why wouldn't it hold up above a key resistance level? Why only a short squeeze and then return back 90%? Right? No one discusses these things after. It's because it's easy to get caught in the hype cycles of things. Okay, because it creates a narrative, right? It helps you understand things in context of a narrative and something that your mind can wrap around. Oh, Elon Musk put Bitcoin in his Twitter. Well, of course the market's going to pump, you know. And then once the market returns back, everybody forgets about Elon Musk and they're like, oh, that was a scam wick. Yeah, no shit. Okay, the market is going to return into its original direction and it'll do what it's supposed to do, which is either chop around here or reaccumulate and push up, or maybe bleed down another, 10, 15, 20%. The way I'm looking at the market right now is it looks like it wants to keep breaking down further, especially due to this crap that's happening in the stock market, which is all these companies that are popping off are drawing attention to things in crypto, which I really, really wish they didn't, because crypto was actually doing relatively well. Now, I think what's going to likely happen, and again, this is just my theory, right? I think this area is probably going to last and range maybe for another week, maybe for a couple of weeks going into February. And we'll probably see possibly, a final capitulation drop, maybe towards like 27,000, 26, maybe 24 or something. And then, in my opinion, from there, maybe end of March, we might have that final flush, and then we start making our way back up towards previous highs of Bitcoin, which is 40K. Okay. So, the one caveat that I just wanted to explain was you do not want to think that these people in Wall Street bets and everybody who's coming from retail are the people who are going to pump your crypto. They're not. Okay. They're in fact putting bigger targets on our backs. Okay, at least we in the crypto system understand how crypto works. We understand the cycles. We understand the amount of excess leverage that's in the system. We understand funding rates, all this stuff. We understand the viability of certain projects in certain areas of crypto, right? We know for the most part that Dogecoin is pretty much a meme coin, but we also know that on the other side, Ethereum has real projects being built on it. We know Bitcoin is the real deal. We know things like FTT are real exchanges, or FTX are real exchanges that have FTT as a real utility token. See, these are things that we know and understand about crypto that others may not. And so others kind of will bring sort of a bad name towards crypto, and then regulators will get involved. And then the government will have a closer eye on crypto. And then you have some crap like this coming out. Because of the last few days that's happened, then you have this stuff. As you can see, India plans to introduce a law to ban all private cryptocurrencies such as Bitcoin and put in place a framework from an official digital currency to be issued by the central bank. See, this is what I mean. This is the stuff that you don't want towards crypto. Now, for the most part, I think this is FUD. I don't completely think that this is the stuff that governments are going to start doing, because I am still of the opinion that this movement is going to continue to the upside going into 2021, because I believe that final hype cycle has not happened. And generally, in markets like this, especially newer speculative markets, you have that 5-wave cycle where you'll have a big wave 1, a very sharp wave 2, wave 3, quick wave 4, and then huge wave 5. Right? I think we have a big wave 5 still yet to come, and I think that will probably happen by summertime, maybe the end of this year, if I'm not mistaken. Okay. Let me see. So anyway, so we talked about the India FUD. What else? Okay, so the other thing that I want to talk about is, so we have the 5K account, right? All of the ups and downs we've had in this account, you've seen me trade back and forth. You've seen me take positions. You've seen me hold spot and hold cash and take lever positions. So as you can see, we're pretty much right near $10,000, right? And today's date is January 30th. Okay, so we've ended an entire month of trading with 100% gains. Okay, so that's pretty solid, right? We've ended the month, 1 month of trading with 100% gains. Could have been more, could have been less too, but point is that's what we've ended with, right? So the best way to sort of calculate that is where exactly is the market, which is the leader of the market, in relation to where we are. Okay, so on December 31st, right, this is where Bitcoin was, okay, right around 28, 29,000. Currently, Bitcoin is up about 15%. Okay, this is, if you were just hodling Bitcoin, you'd be up 15%. We, in our community, have beat Bitcoin by 85% in this 5K challenge. Okay, this is the true, understanding of how you measure beta, which is relative risk in your portfolio, and then the amount of alpha, which is the amount of money that you generated. So we have actually outperformed the market by 85% by having a $10,000 account right now, because we started off with 5,000. For those of you who are new, read this right here. Okay, the challenge that we started on December 30th or December 31st. And then there's some, there's some pinned messages about when we started the challenge, how exactly we're going to go about it, and then the screenshot of $5,000 opening up in the account. So we can wrap up the rest of January as a month that we've pretty much gotten 100% gain in the market, and that's pretty solid. Now, the reason I'm mentioning this to you guys is, if y'all remember, if you've been following this challenge, at one point, okay, so let me pull this up again. Let's see if we can find that playlist real quick. Okay, because at one point our account was at 18,000. Okay, I'm going to show you guys that real quick. 5,000. Shit. Where is it? All right, what's going on, Advantage members? It's Wednesday, December 3rd. Let me do this. Okay, so I think it was right here. So January 9th, okay, basically 10 days into our challenge, we were at 18,000. We've had our ups and downs all the way, right? We went to 9,200 at one point, and then 8,700, back to 11,000, 9,600, 12,300, up and down and up and down, right? So the point is, what the hell is this thing? Okay. So the point is that we've had ups and downs in our account, but we end the month with $10,000. Okay. A lot of people who have messaged me over the last few weeks, especially the last few days, talking about their journey with the 5K account. And I think a lot of them have found the challenge tremendously helpful. But over the past few days, what has also happened is people start to deviate away from listening to things that I do in the challenge, or also going, astray from exactly how we go about trading with proper risk management and position sizing. And so a lot of people in this area right here, especially the last couple of days, have gotten completely chopped up. This is what typically happens with a lot of people. Okay. You get very euphoric and very consistent in your hype and your bias and your direction, and you keep betting heavier and heavier because you want to get back towards the previous high that you had in your account. And you keep making mistakes because this is chop. Chop like this generally is designed to take money from you. Okay. If you don't know what you're doing and you don't know how to position size and you jump into the wrong positions, you can really wreck your account. You can give up pretty much your entire gains for the last several months that you've had in this entire movement. And you're probably going to be back to square one or possibly zero. And I don't want this for anyone, but I do know that a few members have already gone through this because they decided to, once again, go a little bit heavier and not manage their risk or position sizes. And it's okay if you do it from time to time, but remember, at some point, you're going to have to learn the lesson that the market is not always a lottery ticket. You do not have to be in a trade, especially any trade in the market that's has assets pumping. It doesn't matter. Who cares what's going on? Remember, if you follow the broad market, which is Bitcoin and ETH and some, special altcoins that generally move with most of the market, you will get the trend in the direction right. If you keep trying to trade and find out the next big winner like Doge or Alpha or all these coins, and you keep missing out and you keep trying to, heavy lever up and, buy into the hype, chances are you're probably going to keep getting wrecked. It's just how it is. This happens over and over again. And this once again goes back to this example of iOmega. Because the way I'm going to relate this is markets have been around for over 100 plus years. They're designed to, first of all, take money from the masses and give it to the few that are patient, the few that know exactly how markets operate, and the few that are designed to really create the directions of the market, the bigger hedge funds, the bigger institutions. Okay. So you may think that, while you're making all this money and it's great, unless you secure that money, unless you're able to manage your risk, unless you are learning how to position size properly, unless you learn the rules of the game, chances are you will not be able to survive too long. Excuse me. Okay. So I wanted to talk about this today on a Saturday because I know a lot of people have been getting chopped up over the last several days. Okay. But even through our mistakes, I wanted to show you guys in our 5K count without ever really taking too much risk. You guys have seen me take every single trade. I've made every single thing transparent. We are still at a 100% gain. Never having risked, too much of our account. See, this is the point about all this is I wanted to show you guys this challenge so you can at least learn how to manage risk and how to position size. If anyone is doing any worse than this, you should ask yourself, what exactly did you accomplish or where did you mess up in January? At least since this challenge started, by the way, okay? Have you outperformed this account? If so, kudos. I'm happy for you. I'm not jealous. I'm extremely happy for you, okay? But the point is, the things that we've done in this account, you got to start asking yourself questions. Are you repeating the same mistakes that you did a few months ago or a few years ago? And if so, how do you change them? Right? Because going into 2021, the market is going to give you more movements like this. It's going to give you more chops sometimes. It's going to be able to, lure you in and trap you into wrong positions. It's going to lure you in to take heavier position sizes. It will do these things over and over again because that's how markets are. They're never going to stop doing that. It's the same thing like the casino, right? You got to know when to get up, take your profits, or even walk away with your losses. This is one of the reasons why after I took some tough losses yesterday, and by the way, I've shown you guys all my losses, I had all these positions right here. Bitcoin, I had a position, I was down $900, ETH down 112, Link, I was down 500, right? All in all, I took a $1,600 hit. But was I going to let that $1,600 hit become a $2,000 hit or a $3,000 hit? Hell no. I am okay with cutting losers, and you should be too. That's how markets are. That's how markets are designed. Okay. If you start seeing a position go against you and you know that there's something wrong, it's okay to just get out and say, you know what, I'll figure this out later. I'll figure it out when the market starts giving me more bullish signals. So all in all, I just wanted to talk about, exactly where we are in the market. And I believe this is still chop. Um, if I was honestly a betting man, I would probably say that this movement is probably going to take out this low, because I believe that this short squeeze was pretty much a trap, right? I think it's very abundantly clear because, like I said, short squeezes are supposed to actually accomplish, something that um, is very beneficial for the bulls, which is you short squeeze people and then you just start trending up. If you're really supposed to be bullish in the market, you should just keep moving up because you have to make others chase the price. When you have a short squeeze and then you just start returning back to where you basically started, which was down here, that means the short squeeze was nothing but a short squeeze to clean out shorts. It didn't even have anything to do with pumping the market. It just had something to do with cleaning up shorts up here, taking out their stops, and then returning back to the original area that you were previously in. And quite possibly, continuing on the overall, trend that you were in before, which is in this big range that's being created. And so this will probably shape up like a descending triangle. And once it breaks down, I don't think it's going to break down to like 20K or anything like that. I'm not going to get crazy with it. I really think there's a lot of strong support below us, maybe like 27, 28, maybe 25, somewhere around those areas. But until then, it's one day at a time. I think February is probably going to be choppy. Once again, February is going to have designed areas and assets that are going to try to lure you in. Okay. So if you're not comfortable with trading altcoins, you can just take a pause. Okay. Because there will be altcoins that perform. Or if you want to get into altcoins, go spot. Don't go heavy leverage. Okay. Uniswap coins will probably do well too. But once again, be careful. Manage your risk. Okay. DeFi coins will probably do decently well too. Some of them will probably pop off. And once again, we're already in some DeFi coins. And I'm going to start looking at Uniswap. I was telling you guys in the chat earlier, I'm going to start paying attention to Uniswap a little bit more and maybe develop like a game plan of how we can go about trading it in times like this. Or if the market is calm, how do we, utilize some capital to go into Uniswap and make some money? Or if Uniswap coins are correlated with the overall market, how do we take advantage of that? So we'll figure that out. Okay. But don't just get caught up with the hype that you have to keep making money or you have to get back to the highs that you were earlier. Every single day that you start off with some money in your account is your day one. All right. I've said that over and over again. So anyway, that's all I got for y'all folks. Sorry for the long lecture, but it was important for me to explain my thoughts, explain where we are in the market, answer some questions that a lot of people have about, crypto and GameStop and, exactly what's going on in the market and my thoughts and the overall trend. And so I think, to just summarize, I think the GameStop situation and all the stuff has drawn too much attention to crypto. I think we'll probably have most of February, if not most of February and March, probably be a choppy environment. I don't think there's going to be any sort of clarity on direction out of here. We'll probably chop around here, quite possibly break down towards 28, 27, maybe 25. There's a high chance of doing that, but there's also a chance of us breaking up. Okay. Additionally, unfortunately, this whole GameStop situation has also created, put a target on the back of crypto in such a way that you may have this area as a local top for a little while. It could be February or March, but it also could be several months. I don't think that's the case, but it also could be. Because remember, we've drawn so much scrutiny now towards retail trading, retail investors, that now Congress and other people are starting to get involved. And guess where the biggest, retail market is, where there's a lot of people utilizing, high leverage and exchanges abroad and stuff. That's crypto, right? Think people in the US, especially SEC regulators, they already have their eye on crypto. We don't want to give them any more of an opportunity to be more focused on crypto. Okay. All right, I'm gonna wrap it up here. I hope this analysis was helpful for y'all. All right, it was more so like a, you know, lesson of teaching exactly what I see going on in the market and how that hype is going to translate into the next few months, but how you can also be careful. But in any case, I hope you found it helpful. That's it. That's all I got for y'all. Take care and cheers.